sale and leaseback. So sale and leaseback. Don't forget, ladies and gentlemen, that we are looking at an IFRS standard called IFRS 16, leases, called IFRS 16, leases. So, and this is what we are doing here today. As a quick recap before we continue from where we were, I would want us to look at this simple concept here, which I'm sharing with you right away. Abracadabra, we shall overcome. Now, I strongly believe that everybody has access to this wonderful book that I'm sharing here, and that everybody is using this as their manual. As, for example, the way Christians would always make reference to their Bibles. You know, if you're a Christian, you must be making reference to your Bibles often. If you're a Muslim, you must be making reference to the Quran. The Quran. Really want to take it seriously and always be making a reference to it, especially as regards what as regards advanced financial reporting and analysis paper. You can't pass that paper if you're not good in IFRSs. So it's a quick way of recapping here. On 1st January 2021, painting sells an item of machinery to college is 3 million. The asset had a carrying amount of $1.2 million prior to the sale. This sale represents the satisfaction of a performance obligation in accordance with IFRS 15, revenue from contracts with customers. Painting enters into a contract with college for the right to use the asset for the next 5 years. So, ladies and gentlemen, what have we done? In this case here, painting has, we are told here, painting sold some item of machinery. Perhaps they were in some financial crisis. They sold their machine to a company called College. And then immediately thereafter, after selling this machine, they told these guys, fine, you've given us cash flows, but we still need this machine. So could you kindly lease it back to us? Could you kindly lease it back to us? So in this case here, painting company becomes the lessee. And if they are the lessee, of course, in this case here, they must calculate what we call right of use. So how do we calculate right of use? Whenever we have sale and leaseback transactions, right of use, whenever we have sale and leaseback, transaction. Is there any student who is able to remember this concept here? How do we get right of use in sale and leaseback transaction? There is a formula that I gave you, and this morning somebody was able to quote it. But again, it's important for us to keep on quoting this formula severally for them to stick somewhere in our medulla oblongata. Is there somebody who is able to remember? Yes, Evelyn, again, she has repeated this. Now, ladies and gentlemen, anytime they want us to get right of use, because for IFRS 16, once I'm the lessee, when I'm the lessee, I must compute what we call right of use. And you can see what they're telling me, that Mwalimu, to get right of use, go and take the present value of the future rental expenses that we shall be paying, discount them, get the present value all over the fair value, times what we are calling the carrying amounts, Allow me to write this in full. Carrying amount times what we call the carrying amount. What in this case here, the value at which this particular machine is carried in its books here. So anytime they want us to get right of use and they're mentioning this language, sale and leaseback, then we shall be using this concept here. This formula is very, very important. Do we have these three metrics? So you can see on 1st January 2011, painting sells an item of machinery to college for its fair value of 3 million. So fair value FV. Fair value, at times they use the word market value. Fair value and market value are one and the same thing. Thank you very much, KKG. You must be a genius. You must be a genius. All of us had forgotten this thing of what year, that the class has to be recorded. The class has to be recorded. So, ladies and gentlemen, we are making reference to IFRS 16. And today, of course, like we were doing in our last class, we were doing sale and leaseback transactions, where you sell, for example, your building, like the headquarters, like Uchumi did. They sold the headquarters yet to release capital, release finances. So you sell your building, but you tell this person you have sold to, hey, I would still want to make use of what year these premises. So even if I've sold it to you, please lease back to me. For sale and leaseback transactions, there is a formula, very important formula we must always remember. It's called how to calculate the right of use in situations where we have sale and leaseback transactions. This formula is very important. And remember, there is a question that we were doing in our last class, which we had not finished. All right, I just chose to begin with a new question here from scratch for purposes of a recap, to bring everybody up to speed regarding what your sale and leaseback, and then we go back to our old question, which of course we've said students should be able to leave some good space, like half a page space. But again, it's your book. Even if you write wherever, you can write wherever, it's your book, so long as you're able to understand your write-ups. So this is present value over fair value times carrying what year times carrying amount times carrying amount times carrying amount. Now I'm recording, all right? Now I'm recording. Now, ladies and gentlemen, this is what we have here. This is what we have. This is what we have here. On 1st January 2011, painting sells an item of machinery to college for its fair value of 3 million. So fair value has been given. The asset had a carrying amount of 1.2. So also carrying amount has been provided there. This sale represents the satisfaction of a performance obligation in accordance with the IFRS 15, revenue from contracts with customers. Painting enters in contract with college for the right of use for the next 5 years. Annual payments of 500 at the end of each year. I can see my internet is unstable, but we shall overcome. We shall overcome. The present value of the annual lease payment is 1.9. The remaining useful life of the machine is much greater than the lease term. No problem, no problem. I'm only interested in these three items. I'm only interested in these three items. Ladies and gentlemen, I'm interested in the present value. They have given me the present value here as 1.9 million. Present value as 1.9 million. All over the fair value, they've given me fair value of 3 million. Fair value of 3 million. How about the carrying amount? The carrying amount, they have given me 1.2 million. 1.2 million. So I would need you guys to give me the right of use of this asset. Please give me the right of use of this asset. Right of use of this asset. Perhaps in this case here, we can use our figures in three zeros in terms of thousands. In terms of thousands. So we talk of 1900 to be just fair here. In terms of thousands, 1200. So now we are not in millions. We're writing this in terms of what year? In terms of, so 760. Esther tells me the answer should be 760. The answer should be 760. The answer should be 760. Now, hey, you experts, can you kindly go ahead and give me the journal entries here? Give me the journal entries. Remember, you're looking at this as the lessee, as a lessee. Lessee is the one who has the right of use, which is an asset. Please give me the double entries there. Give me the double entries there. Abracadabra. Abracadabra. Very interesting stuff. Very interesting stuff. Very interesting stuff. You'll be able to like this very much. You will be able to like this very much. You would like this very much. Give me the double entries there. Give me the double entries. Not many students will be able to get the double entries of sale and leaseback transactions. You guys will be a few, among the few who will be able to get it right, because now I'm going to teach you and you shall be able to take time to understand this very well. Now, ladies and gentlemen, of course, right of use is the asset, isn't it? So in this case here, we shall go ahead and debit what we call right of use. So we shall come here and debit right of use because it's an asset. Debit right of use. So we are debiting here. So in this case here, the journals here, the journals here. So we are debiting the right of use. The right of use, because I mean, this is an asset. So in this case here, 760. So can you tell me straight away when this comes up, what are we going, ladies and gentlemen, to credit immediately? Is there somebody who can give me the credit here? What am I going to credit here? Somebody. What am I going to credit here? Thank you so much. I'm going to credit what we call the lease what here? The lease liability. I'm going to credit the lease liability. So credit lease liability. But now here there is something that so many guys confuse. Lease liability in this case here will be the same as the present value. Present value will be the same as present value. This one here now, they'll not be the same, because remember here, right of use, I've been able to apportion the right of use, but the present value will still be the lease liability. So is there somebody who is able to remember our present value? Oh yes, ladies and gentlemen, I'm able to remember the present value. I'm able to remember the present value. The present value has been given to us. The present value has been given to us. It is 1.9. It is 1900. So it is 1900. It is 1900. So up to here, ladies and gentlemen, are we together? First of all, up to here. Are we together? First of all, ladies and gentlemen, are we together? Are we together? Are we together? Now, there are two things that you must always remember very fast. You've sold a machine. When you sell this machine, there are two things you must remember very fast. Two things. Receiving the cash. So receive the cash. Receive the cash. How much was this machine sold for? How much was this machine sold for? How much was this machine sold for? Remember, the cash price there is the market value of the machine. The cash price there is the fair value. The fair value is 3 million. In terms of thousands, then this one here automatically, in terms of thousands, this one here automatically will be what here? 3,000. And remember, you will debit the bank account. You debit the bank account. So you must squeeze this one here. For me, I'll be able to squeeze it very easily. I will come here and receive this money. So I'm debiting because I've sold the machine. I've sold the machine. So I'm debiting here the bank account. I'm debiting here the bank account because its debit will be here, 3,000. And then, ladies and gentlemen, I will have to remove, I told you have to remember two things. I will have to remove this machine from my books of accounts. I'll have to remove this machine from my books of accounts. So how do I remove this machine from my books of accounts? By crediting the PPE or by crediting the machinery account with what here? With the carrying value. With the carrying value. Now, ladies and gentlemen, please come here. Now, here I'm crediting. So come and talk of credit. You credit machinery. You credit machinery or the PPE. By what here, somebody? We write it off. We remove it. On the credit side, we remove it by, in this case here, crediting the machinery account basically with the carrying amount. So is there somebody who is able to remember this carrying amount? Is there somebody who is able to remember this carrying amount? Is there somebody who is able to remember this carrying amount? Is there anybody who is able to remember this carrying amount? Is there anybody who is able to remember this carrying amount? They're not talking to me the way they normally talk to me. It is 1,200, yes. Thank you very much. It is 1,200. So remember, we are crediting here. Yeah. So, and then when I look at the debits and the credits, the last thing now, when I look at the debits and the credits are more. So meaning that there is a profit on this. What I will do, I'll come and credit my P and L. Credit P and L. P and L, of course, with the profit. With the profit. So how do I get this profit? Of course, it will be debits minus credits. So it will be 3,000 plus 760 minus the credit 1,900 plus 1,200. So is there somebody who is able to give me the credit here? How much are we crediting our P and L with? 660. 660. 660. 660. I'm so sure you may not be able to really put everything regarding this into our great heads. But one thing I know is that there are low-hanging fruits. There are some quick wins. If somebody tells me to come up with a journal, I will not miss the bank, for example, because I'm going to sell the machine. All right, I'm selling this machine to become a lessee now. So I'm going to receive this money in the bank. I can also not forget debiting the right of use. And I will not forget, ladies and gentlemen, I'll not forget crediting the lease liability, because now I'll be liable to paying the lease rentals. And this lease liability is not the same in this particular case as the right of use because of sell and lease back. All right. So in this case here, the lease liability will always be exactly equal to the present value of the lease rentals, present value of the lease rental. I may forget about these others, like for example, even machinery, but there are some quick wins here. I know there are some areas here which could be pain points, like how to get these 660. And by the way, there is a formula. If you want to use the formula for getting these 660, you can as well use a formula. You can as well use this formula to get this profit, here. You see, we have the total profit. If you want to use the formula, we have the total profit. We have our total profit earned. Our total profit earned, we normally take the market value, which is the fair value. So we normally take the fair value minus carrying value, minus carrying amount. So we are carrying this book, or rather this asset, we have sold it for 3,000, but in our books, it is carried at how much? It is carried at 1,200. Remember, the carrying amount is 1,200, but we have sold it for 3,000. So he's able to give me this total profit. So this is method 2. This is method 2, because I've also seen in some questions where they ask you for this profit. So in this case here, what is the total profit earned? Remember, we are selling it for 3,000, but the carrying amount is 1,200. So it is 1,800. So this is 1,800. Thank you so much. This is 1,800, like that. 1,800. And then now remember, out of this 1,800, we must apportion it. There is a special formula for apportioning this. What is this special formula? So in this case here, for the P and L of the lessee, in this case here, what this guy will do, he'll come and take the fair value minus the present value over the fair value times the total profit here. Times the total profit. It's a very important formula, but I don't want you to cram so many formulas, really. No. So in this case here, the fair value is 3,000. The fair value is 3,000. Is there somebody who is able to remember the present value? Is there somebody who is able to remember the present value? The present value. Is there anybody who is able to remember the present value? 1,900. 1,900 out of fair value, which is 3,000. Whatever I will get, I will come and multiply this with the total profit, which is what here, which is 1,800. Whatever I will get, I will come and multiply this with the total profit of 1,800. And if I'm correct, then I should be able to get that 660 exactly. I should be able to get the 660 exactly if I'm correct. If I'm not correct, I'll get some other different figure. Yeah, somebody's getting 660. 660. Now, ladies and gentlemen, please listen and listen to me very well. Now, having done these great things, can you kindly, in this case here, tell me what do you think will be the next thing to be done? Remember, we are doing lessee accounting. We are doing lessee accounting. So the next thing that you'll need to do is to think about the depreciation, because now this asset is still yours. So please go ahead and give me depreciation. Go ahead and give me depreciation. Give me depreciation first of all. So do we know the useful life? Remember, we have this asset could be having 30 years, could be having 40 years. But us, as the lessee now, the asset will only be ours over the lease term. And the lease term, the examiner has told us that the lease term is how many years? It's 5 years. The lease term is 5 years. The lease term is 5 years. Is that okay? The lease term is 5 years. 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 And then if that is the case, this is how we shall do it. This is how we shall do it. This is how we shall do it. So depreciation. So depreciation per annum, it will be the ROU, the right of use, divided by what is the useful life, which is 5. So ROU, you guys had given me a figure. You had given me a figure for ROU, only that I seem to have forgotten it. The right of use was 760. So I'll take 760 divided by 5, which gives me what here, somebody? 760 divided by 5 gives me what here, somebody? 760 divided by 5 gives me what here, somebody? Please talk to me. It gives me 152. Thank you very much. And then now the last step in lessee accounting, you must do for us a loan amortization schedule. You must do for us a loan amortization schedule. Here I would want to give you a very good shortcut, a loan amortization schedule. So the last step is loan, second last actually, because the last step will be the financial statements extracts. So loan amortization schedule. So in this loan amortization schedule, then what do we have here? Loan amortization schedule. Loan amortization schedule. So how many years do we have? 5 years. But not unless really the examiner wants you to get, ladies and gentlemen, for all the 5 years financial extract for the 5, which will be very, very hard. Normally what we do for the first 2 years. First 2 years. So this is what we shall do. We shall do for year number 1. So we have year 1, 2. All right. And then we have in this case here opening balance. Opening balance. Then we have in this case here interest. We have interest. And then we have in this case here amount paid. Amount paid. And then we have closing balance. Closing balance. Because in most cases, ladies and gentlemen, this examiner will ask you to do extracts for year number 1, end of year 1. Extracts for end of year 1. To be able to get extracts for end of year 1 as an accountant, I only need year 1 and year number what year and year number 2, those 2. Year number 2 will help me to know the non-current assets. All right. So then can somebody in this case here tell me for year number 1, what is the opening balance? Not the right of use. Not the right of use. The opening balance here will be the present value of the lease liability. The present value of the lease liability. So are you able to remember that present value of the lease liability? Leonida Matunda tells me it is 1900. So first of all of us, we have to be in agreement regarding this 1900. Is that okay? 1900, is that okay? Is that okay? 1900, is that okay? 1900, is that okay? Is that okay? 1900? Great. So then do we know the rate of interest? Has this examiner given me the cost of capital? What is the percentage? What is the percentage? I'll have to share this screen again. I'll have to share this screen again. I'll have to share this screen again. So you can see, ladies and gentlemen, here that the percentage, the interest rate implicit is 10%. 10% is the rate of what here is the rate of interest. So 10% is the rate of interest. So 10% is the rate of interest. So could you kindly then have this amount earning the 10%? So then the interest amount here will be 100 what here? 90. How much are we paying every, so 10% of 1900. How much are we paying every year? How much are we paying every year? How much are we paying? He has told us that every year we are paying 500,000. You can see the annual payments are 500,000. Have to roast me to do at the beginning of each year. We shall be able to do that before the class ends. So in this case here, we are paying 500,000 at the end of each year. So then we have here 500 amount paid here, 500. And then could you then kindly give me the closing balance? You take 1900 plus 190 minus 500. So we have here 1900 plus 190 minus 500, which gives me 5090, which gives me 5090, which gives me 5090. And by the way, I attended your class with this young great man who represented me and who shall be representing me in some other topics as we move on. I realized that you guys were asking him so many great questions. How comes you don't get to ask me the same questions here? Is it that I look so harsh? Is it my face? How comes, I don't get those many questions in class here? Is it my speed, which is very high? Because I saw you guys were asking great questions, many questions. I'm not being asked the same questions. Are you sure? No, I doubt. So the closing balance here becomes the opening balance here. Please feel free to ask me as many questions as possible. Don't fear. This is the essence of the Zoom classes. At least you have seen me. I've never seen you. I don't know in this case here how even your faces look like. You can decide even to use a different name. So long as in this case here, you are proactive in class. So long as you are very active, you must be proactive. I would want those kind of discussions that I was saying yesterday. So 1590, let this amount earn interest. So 10% of 1590, that gives me 159. And then we pay 500. Then what is the closing balance here? 1249. So to get the closing balance, we are taking the opening balance plus the interest minus what has been paid. We are taking the opening balance plus the interest minus what has been paid. So then in that case here, we have 1249. Now, I will not continue the end. It will be a waste of time. But what I normally tell my students, assuming you go to an exam, and then you read question number 1. Question number 1 looks like, this may not be advanced financial reporting. This could be like home science. Blah, 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 blah. Cup of water, whatever flower. So it looks like home science. Another one looks like mountains. That's talking about mountains. It could be looking like geography. And then you realize that the only question that you're able to do is the question of leases. So instead of you gazing at the ceiling throughout, looking up there, all right, or even walking out of the exam room, like say 30 minutes into the exam, instead of doing that, then please, you have got something that can keep you busy. If they've given you a lease term of 10 years, you can go ahead and do up to 10. At least you make yourself busy and you scare your neighbors. And then your neighbors will be wondering, what was that young lady writing about so much, all right? But we pray that doesn't happen in an exam. We expect good exams. Where if the examiner is silent about which period, to cover, you shall only cover years 1 and years 2 alone. Years 1 and years 2 alone. 2 years. But what are we saying? Just in the case, ladies and gentlemen, you just get yourself that this is the only question that you know. What do you do to kill time? Please go up to year, even 2, up to the last year of the lease. Now, here, I would want somebody in this case here to go ahead and give me the non-current liability. And the current liability. non-current liability and the current liability. Non-current liability. Joshua is asking a very good question here. Right of use is the asset. Right of use is the asset. And for us, in this case here, to depreciate the asset, we use right of use. To depreciate the asset, we shall always use right of use as a lessees. But you see now, whenever it comes to amortization schedule as a lessee, we are being given a loan. And a loan, remember, a loan given to us is always equivalent to the present value of the lease liability. Present value of the lease liability. You can even cram it, Joshua, this way, that for loan amortization schedule, use present value over the lease liability of the lease rentals. And then, of course, Joshua is asking a very important question there. And then, of course, for depreciation, we shall always use what we call right of use. So here, I would want to know whether there is anybody who is able to remember that to get non-current liability, we use what we call secondary diagonal in matrices. So come here and pull this there. So then this one here becomes what here, 1249. 1249. We don't have like the third year to continue pulling like that. So that means that is the end of this thing, except for you giving us the last figure here, which is the current liability. So how do we get this current liability? It's very easy. We know that the total owing is 1590 and 1249 has been deferred to future years. 1249 has been deferred to future years. So then how much will be paid within 12 months? It will be 1590 minus 1249. It will be 1590 minus 1249, which gives me 341. Ngera. Great. 341. 341. It is well, we shall overcome. Let me see why. Why is this person using we shall? We shall overcome is a very powerful statement. Is a very, very powerful statement. We shall overcome is a very, very powerful statement. Very powerful statement. Very powerful statement. Very powerful statement. I used it in December. We shall overcome. I used it in December. We shall overcome. It was quite a bad experience, and I used it, and I can see I'm overcoming. Esther is asking a very good question. Why are we doing for only 2 years and not 5 years? The examiner will guide you. The examiner, for example, will tell you, do financial extracts, in this case here, for the 5th year. If the examiner is silent and it doesn't tell you do financial extract for the 5th year, you do the financial extracts for year 1 alone. Year 1 alone. And for you to do the financial extracts of year 1 alone, you need year 2 for purposes of knowing the non-current assets. So here the examiner never told us like do the financial extracts for the 5th year, for the end of the lease term. He just told us to do the financial extracts. So I'm only going to do financial extracts for year 1 alone. But you see, I can't do like year 1 alone because I need this number here to get non-current liability. I need this number here to be able to get these 2 columns. Thanks for asking that question. Lease, hii maisha ni ya kushtuana. I can say Lease ataki kushtua neighbors, lakini nakwambia maisha ni ya kushtuana. Hii maisha ni ya kushtuana. All right. So in this case, I give us now the financial extracts here. So go ahead and give us the financial extract. So give us the extracted income statement. Give us the extracted income statement. Extracted income statement for year 1. Extracted income statement for year 1. Extracted income statement year 1. Extracted income statement year 1. Extracted income statement for the first year. So is there somebody who can give me this extracted income statement? So in this case here, ladies and gentlemen, this changes a little bit. All right, this changes a little bit. So we shall have an income. In this case here, we have gain on disposal. of the machine. So are you able to remember that gain on disposal of the machine that we got? Are you able to get gain on disposal? Are you able to remember the gain on disposal? Wait, I'm alone. 660, isn't it? 660. 660. And then now we have our expenses. So our expenses are two. Number one, we have depreciation. Depreciation. Are you able to remember that depreciation? Depreciation that we have just computed up there. 152. 152. Are you able to remember any other expense? Are you able to remember any other expense? Are you able to remember any other expense? Apart from this depreciation, finance cost ngera. Finance cost, not rental, finance cost. Finance cost. So finance cost in this case here, what do we have here? Finance cost, what we have for year number one. Interest is 100 and what year? 190. The interest is 190. Those are the three items only that you bring. That is extracted income statement. Those concepts of lease rentals and whatever will come in the statement of finance. Is it, ladies and gentlemen? That is it. Remember, in IFRS 16, you are not going to take like you are renting this house, honestly. No, it is your asset. For the 5 years, it's right of what year? Right of use. Right of use. Right of use. All right. So go ahead and give us the extracted statement of financial position year one. Extracted. Statement of financial position. Extracted statement of financial position year number one. So we start with assets, specifically non-current assets. So on non-current assets, we shall book right of use. Please give me the right of use. Are you able to remember the right of use figure? 760. 760. Of course, we less, in this case here, accumulated depreciation. It is only for year one. So I'm only using the word accumulated to scare you. I told you we live by scaring others. And because she's telling me that, Mwalimu, we don't need to scare neighbors. Every day, we live to scare others. Like today, I'm so sure you'll wear very good makeups in the morning. Why would you want to wear very nice makeups in the morning? Because you want to scare some neighbors, isn't it? Or is it because you would want to be very comfortable? I believe it is about scaring others. We shall overcome. So what is the accumulated depreciation here? What is the accumulated depreciation here, ladies and gentlemen? Accumulated depreciation. They have forgotten. It's for 1 year. We had, was it 152? We had computed it somewhere. To prove the examiner wrong. 152 years. 152. Then what is the carrying amount at the end of the year? So carrying amount at the end of the year. So carrying amount at the end of the year is how much? 608. And then you go to the liabilities. So liabilities, ladies and gentlemen, we have non-current liabilities. Non-current liabilities. So we have lease liability for year one, lease liability for year one, non-current liability 1249. And then we have in this case here current liability, current liability. So we have in this case here lease liability. A lease liability. We have the current amount of 341. Allow me to lift. Here now I need some power. Yes. Once you write it, don't let me, in this case here, kill myself lifting this heavy thing. Put your thumbs up there. Once you finish writing, put your thumbs up. Done. Thank you, Paul. All right. Thank you. All right. Thank you so much. Thank you so much. So then we are done. Again, you will get some ninjas who would want now to scare the examiner by trying to tell the examiner that this account has to balance. No, you're not a very nice ninja. You ninja, this is just but an extract. This is an extract. This is an extract. This is an extract. Okay. Then now, are we ready to go back to the question that we were doing in our last class, the past paper question? Are we ready for that question? Are we now ready for that question? Are we ready for that question? All right. So let's now do the question in our past papers. Do you remember the sitting? Do you remember the sitting? Do you remember the sitting? December 2021. December 2021. Thank you, Leonida. December 2021. And then there is one thing that I would want, ladies and gentlemen, to, it's a secret. This one is a secret. Perhaps I should just whisper. It's a secret. Please, as we study AFR, never go for perfection. Never go for perfection. Especially these standards, no. But there are those key areas that you must always understand. Once you understand them, and then you go and do justice in that question for 30-something minutes, remember maximum should be 37 minutes. You should be able to stop. You do your best. Like, for example, if I go and I realize that this examiner wants me to do like extracts for 5 years, I will not do extracts for 5 years. What I'll do, I'll only do an extract for year number 1 and leave it there. Because if I try, like if I get, I've never seen the examiner saying like that. If I try doing extracts for say even 3 years, trust you me, I'll take more than 1 hour in that question. Because now remember, for every year, you'll have to do like these are columns, column year 1, year 2, getting accumulated depreciations, and you are doing a full amortization schedule. No. I look at what will be that student who is above average be able to do. That student will only be able to do an extract for what year? For the first year. And I'm not a genius. I know I'm just slightly above what year average. Life wants people are slightly above average. Don't be too high, don't be too low. All right. So I'll always be doing what in this case here people who are above average will do. Because of what? If I had the luxury of time, then I can do all the years. But remember, in your exam, you're fighting with time. AFR is all about fighting with the time in your exam. For those students who did this AFR last semester, and they failed, unfortunately, trust you me, one of those things that made them to come back to this particular class is poor time management. They must have spent more than 1 hour in group consolidation question. And I told you, and I'll always keep on telling you, regardless of how sweet that thing is, once you realize you have hit 37th minute, leave that question, go to a different question. AFR is all about exam technique, even when you are studying. Because I always get students who are trying to look for perfection. Never be perfect with the AFR. Try to be perfect in the other papers, but not AFR. AFR in this case here wants you to have like a general overview. All right. And then appreciate your theories very nicely. Your theories. Like now you'll see, even in this IFRS 16, we have got theories nicely. Ensure that you touch every question. But if you just try massaging one question for 1.5 hours, trust you me, you will fail. You'll fail. And this is something I've gotten so many students even coming to thank me. Like when I have these low-hanging fruits classes, end of the semester, last 1 week, the students will come and tell them, take this. Then they go and pass by just doing that. All right. Not that there is any magic bullet I've used. No, it's because I've told this student, number one, ensure that you tackle each and every question in the exam room, in that exam paper. And you can only be able to do that if you recognize the fact that you can never spend a lot of time in only one question. So I've also seen students in this case here taking a lot of time on these IFRS 16 questions. No, no, I cannot. This one here maximum time will be like say 25 minutes, because I also know where there is a theory or other where there is a lease question in part B. A must be a theory question, so 25 minutes here, another 5 minutes in a theory question like that, and then you pass. You pass. You will never pass AFR if you're a perfectionist. I'm sorry to give you a warning, quite a bad warning in advance. Like if I were you, even when I'm studying, I'll make sure that first of all, I'm just exhausting the videos that we are producing here. I'll not even be looking for very many new questions, because mine is to get a general understanding. A general understanding, not like I would want to be perfect, to be getting, in this case here, my balance sheets, balancing. No, if you want perfection, the time needed, you will not be able to afford it in your exam. You will keep on failing. You get somebody has failed a paper here, blaming the village, which is no, there is a secret you haven't understood. It is all about time management. And that is why you realize, like in any AFR exam, those days when I was young, with a bright future, when I used to be an invigilator, every time we would tell students that, you know what, it is 10 minutes to the end of your exam. Start looking at your paper and see whether you have written your NAC number very well, etc. That is the time you get, in this case here, students, for example, even hairs, literally jumping up, standing. They are sweating. And then they're sweating, of course, in this case here, from the wrong places. You know, you'd rather sweat from wherever, I mean, inside, but not here. Sweating in this case here in an exam profusely, not a joke. Hata karatasi nataka kumnyang'anya na nguvu, hata karatasi anajaribu kuandika bara. No. AFR is about time management, and once you understand that concept, then you will never ever go wrong, both in how you study, and then number two, in how you do your exam. So then let's get to December 2021. December 2021. December 2021. Let's do this question together. Yes, you can get a loss. You can get a loss, yes. Low-hanging fruits principles, yes. You can get a loss, yes. So, of course, if you get loss, you shall be able to declare it here. As under income, you'll just have what here? A loss on what here? Disposal. Or the right profit on disposal, and then you put a negative. All right. So this is what we are doing, ladies and gentlemen. So it is December 2021, question number 3A. December 2021, question number 3A. I always use this concept of imperfectionism, and I end up becoming number one. Like during my time, FA4, I was the best. In ACCA, globally. In SBR, it's called Strategic Business, this book that I've given you, I was number 19 during my time, global, and I never balance any question. Even when I'm studying, I never balance any question. It is very costly. I don't know, you guys, whether you know that concept that is very costly for workplaces. Perfectionism will cost you opportunities. Will cost you opportunities. Your internet is unstable. We shall overcome. Why is Safaricom misbehaving today? We shall overcome. So we are told the hand limited. Yeah, there is a problem. It's waving. Yes, agree. How about now? How about now? Has it stabilized? Has it stabilized? Has it stabilized? Has it stabilized somehow? Not really. It's on and off. We shall overcome. 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 Let's give ourselves like 2 minutes. We see how it goes. Is it okay now? Is it okay now? Is it okay now? We proceed. Okay, great. Thank you so much. So we are told that December 2021, question number 3A, Hen Limited sold a building at its fair value of shillings 112 million to a finance company on 31st October 2020 when its carrying amount was 78.4. So carrying amount is 78.4. The building was leased, and by the way, what is the total profit there? Total profit, because I can see this is quite low hanging. Total profit, I can see I sold it for 112, and this thing's carrying amount was 78.4. Carrying amount was 78.4. Administrator, thank you. So are you able to give me the total? $34 and 3.6. Or is it because of this Facebook live streaming? So it means that the Facebook people now, we have to shut you off. Because if you are interested with our classes, you can